I want to bring in Belpointe Chief Strategist David Nelson. And David, this is true. It's been quite the year, but the 2024 S&P 500 rally, this is not what we were forecasting to see. Most forecasters did not expect this. They thought it was going to fizzle, and it didn't.
No, it didn't. And, last year at this time, the target was actually 48.33. We passed that in 4 weeks. We hit the highest estimate, which was 5,200 at the end of the first quarter. So, yes, these trends can continue, and we're obviously in the early stages of a pretty important technology shift, and hence the year was pretty good.
It's certainly interesting to see, the changes in the market over the year for the good. But we did see a big net outflow, $35.3 billion just last week. This is the largest weekly outflow since December 2 years ago. Is this normal end of year selling or is something else going on?
You've seen a lot of insider selling this month. Coming into this month, the Russell 1000, you had 135 stocks up over 50%. You had a couple of dozen up over 100% and two over 500%. That sparked a lot of insider selling. I think a lot of investors kind of pulled forward some of the work they were going to do in the early part of the year.
Do you think that there's going to be any landmines in the first quarter of the new year? I mean, there's a lot of uncertainty.
You know what? We don't know what we don't know. And it's always been that way. There's obviously some real positives going into this year, but we have some negatives. We have a Fed that is not as much on our side. Just a couple of months ago, we were looking for another additional 150 basis points of cuts between now and the end of March. Now we're going to be lucky to get just one cut. It doesn't mean stocks can't go up, but the hurdle rate is that much higher.
A lot of the themes, obviously, that we've talked about, this has been the trend for the year, and really for last year as well. You had AI, the Magnificent Seven. Those were the dominant two trends in the market. Do you think that those trends are going to continue, or do you think there's going to be some other stories?
No, they're going to continue. They're still going to be very big. But I think I would caution, don't throw away all the losers. We tend to do that at the end of the year. You got three sectors right now fighting for last place: energy, materials, healthcare. Every time we throw them away, if you think back to 2020, energy was pretty awful. The next couple of years was pretty good for that sector.
Yeah, well, energy under drill, baby drill is probably going to be strong, but also even solar and wind. We've had some analysts come on the show and say that because of the need for energy for data centers.
It is, as a matter of fact.
We're going to need all the power we can get.
We're going to need everything that we can get, and certainly wind and solar will be a part of that. But I think we're going to have to go beyond that because we need something to really handle the base load, and I don't think they're ready yet.
I think that's in addition to the rest. I'm saying all the power from everywhere, and that includes wind and solar.
132 gigawatts is 12% of our power. We're going to need a lot.
A lot of power, so you can get it wherever you can. So you say, what are the things you say about the early part of January? You see there's an add-on effect of appreciated names. A lot of advisors and their clients want to reposition, but they do those big assets because of the cap gains hit. They do it in January, so they don't get hit until 2026 on taxes.
And I think
good point.
I think everybody was looking to wait until January, and the insiders beat them to it because if you look at companies like AppLovin, $4 billion in sales, and you're seeing shares sold like 100,000, 200, 300,000 shares at a time. For a $300 stock, that's big money.
Terra Resources. You like this one?
I do, and it hits onto your energy theme. I guess everybody got the natural gas memo today because it's up a lot. And maybe this would have been a better trade on Friday. But these are free cash flow machines. And the one thing we know about AI is we're going to need power and a lot of it. And these guys can deliver. You're looking at a 17% free cash flow yield. Buy a basket of these.
And you like Expedia. Travel name. I was kind of surprised by that.
Expedia, this is a mispriced security. I look at this. It has the gross margins of a sexy software company, yet it has an earnings multiple of that of a legacy retailer. There's a mismatch there. It's worth a lot more than it is. At 13 times forward earnings, amen.
And name recognition at the end of the day, right?
Look, and they're addressing some of the concerns. AI is a concern, and they've already partnered with ChatGPT.
All right. David, thank you so much.
Thanks for having me.
Happy New Year.
Happy New Year.